Hi everyone, welcome back to Be Rich. It's me, Vinod, recording remotely from Bangalore still, and I would be here till New Year's, so I'm sorry if the audio quality and the video quality isn't up to spec, but we're trying to do the best and get some content out to you guys as much as we can from these trying circumstances. So do be kind and understanding in your comments when it comes to audio quality especially. I wanted to talk about two things today, which is about the finance sector, the banking sector, and specifically two stocks or two banks in this sector. I want to talk about IDFC and I want to talk about IndusInd Bank. So IDFC and IndusInd Bank have both been under stress this year. In the beginning of the year, in January, if you had asked anyone this, they wouldn't have said this would be the case, especially after the IDFC merger. Things were looking fine and dandy, as they would say, but things have not turned out as expected as far as IDFC and IndusInd are concerned. Of course, we have spoken in great lengths about this, and they've spoken, even I have spoken. Most of this pain has come from the microfinance sector, and this sector is suffering because of the quality of the loans and the economic slowdown which India is going through, and the K-shaped recovery India is going through. There seems to be a lot of defaults in that sector. That is the lower income group. And also, some of the banks have been very zealous in microfinancing companies, especially in lending to people who did not have the right credit worthiness to have one or two or three loans piled onto them. And a lot of them have been under enormous stress. This has been true for the small microfinance companies, and this is also true for large banks such as IDFC and IndusInd. So IDFC, let's first break it down. Okay, the asset quality, if you look at it per se, is still great. The gross NPAs are down, the net NPAs are down, and they've given provision for the microfinance loans which they have. Provision means they've set aside some of their money, saying in case these things go default, don't worry guys, we have this covered. Here we have get some cash aside to make sure those requirements are met. That's what provisioning means. Then the deposit and credit growth has been good for the bank. The current account savings account is up by 38%, term deposits are up 28%, and loans are up 21.5%. What is interesting in the loans is the infrastructure loan financing which they do has come down from 19 to 1.2%, and they've also launched a whole slew of new products. That means the quality of these loans have also improved. Why is it important, this current and savings account and loans? Because that's how banks function. I've told you this many times in the past. What do banks do? They take depositors' money and offer them interest, and in turn they take this money and lend it out to people who require financing, and they in turn pay the bank interest. The bank takes out its operational cost and profit out and then pays the interest to the depositors. So this is how the basic system of the banking sector works, and this is what IDFC is doing, and they've been doing it well this year. Of course, banks, whenever they do have requirement for capital assistance, they do borrow. And there's a problem in India currently because interest rates are very high. So the credit costs for these banks and finance companies are much higher than what they were used to. So in terms of that, profitability and the interest rates passed on to customers is also much higher than what we're used to, thanks to the interest rates from the RBI being much higher. This, of course, will impact income and profitability of these banks. But at the same time, if you look at valuations, the whole sector, banking sector, seems to be underperforming, and there's value to be found in it. The IDFC Bank itself is trading at a much lower price to book compared to the rest of them. And even if you take the median of IDFC, it's trading at a median low. And if you look at IndusInd Bank per se, their stock price is down 42%. And quarter two has been much of a struggle for them thanks to the microfinancing unit within IndusInd Bank. They have a microfinancing unit like Manappuram has Ashirwad, IndusInd has Bharat Finance, and that has been weighing down the bank. Recently, it came out in the news, they've taken 1,573 crores worth of loans, bundled it up, and they're trying to sell it off and get it over and done with. And they're setting the reserve price at 85 crores for this 1,573 crores. That means they're only expecting around a 5% recovery from these loans. So it is good news for investors of IndusInd Bank. Yes, it also shows you how bad the NPAs, non-performing assets, are there in this microfinance sector, and how bad the pain is, and what is the quality of these loans. It lays it stark and bare to everyone to see. But at the same time, it shows you that IndusInd is trying to move on and put that to rest. And the coming year should be a better year for IndusInd. IndusInd, of course, is a much larger bank than IDFC, and it has a great opportunity to recover this coming 12 months. Its stock price is trading almost at book at 900 odd, and their book value is 800 odd, so it's almost at book value, at par. This coming year should see IndusInd improving. I don't see it improving spectacularly. This whole sector, I would say, it will take 2 to 3 years to improve. So if you are a value investor and you're willing to hold on to these stocks for a long period of time, there's great opportunity to be found in these two banks specifically and across the whole sector if you have the stomach to watch things go up and down. But do be cautious there. Not everybody might survive. So if you are looking at extremely small microfinance companies, I would tell you to please be careful and do proper study and analysis of the bank or the microfinance unit and study their underlying assets and see the quality of it and read a lot about the people promoting it and who has majority of the shares and who are the promoters and who is funding these banks or these microfinance unit before you dive into it. Just looking at very low prices saying, Vinod, you are mentioning this will recover in 2-3 years and IndusInd is only down 50%, this other company is down 70-80%. That means there's more chance of leveraging much better profit, so I'll put my money there. I get what you're saying, I understand that emotion, all of us suffer from that. But there are cases in point, especially small microfinances unit may not survive. People might decide to pull the plug. Even the people who are funding them might decide to pull the plug and call it, we'll cut our losses and move on. And you should be ready to be handed that verdict in case they decide to do that. I don't want to mention names because then it'll look like I'm trying to say buy this or sell that, which I want to refrain from. These are things which I just want to give you information there to you so you can take that into consideration and decide to do what you wish with it. This is what I'm doing. I'm looking at pockets of value in finance sector, and wherever I see strength and I understand the bank and I have relationship with these banks, then I maybe would look at buying a piece of it and holding on to it at least for 3 to 4 to 5 to 10 years. I don't plan to sell these. I'm not looking for a short-term gain. So if you are looking for a short-term gain or you're looking for some kind of a flip within 12 months, I would strongly advise you to stay away from all this and focus on something else, because this is not going to give you the short-term flip which you're hoping for. Something like gold might even outperform this coming year, looking at everything put together, especially with what Trump is saying and the headwinds of inflation and where the dollar is going. Gold might be a good option to look at if you need to look at something short term. Gold is always something great to hold in your portfolio, especially in a situation where there's a lot of uncertainty in the market and you really don't understand what is going on and where things may be going, as things have become very fluid right now. So this is what I had to share with you today as far as the finance sector is gone, especially IDFC Bank and IndusInd Bank. I hope they are in your radar and you do look at them and study them and then maybe consider them. Other than that, I have my challenge coming up for the next year, starting 1st Jan. I've been putting my thoughts and notes down together on that. I'll have a video out on that very soon, and hopefully you'll be able to join me on 1st Jan as we embark on our investment journey and we try to build wealth and freedom and show you a roadmap how to go on Tiffin Coffee range for an entire year and slowly accumulate wealth. Thanks for watching the video as always, and do subscribe and share this channel with friends and family, whomsoever you think might like this kind of content. It's me, Vinod, here, wishing you a wonderful day and a wonderful evening, and see you tomorrow with another one. Thank you for watching Be Rich today. Bye.
Hey guys, that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it, and we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it, and please give us comments and feedback on what you read. Thank you.